All right, good people, good people. What's good with y'all this evening? What's happening? It's in Quantum, back with you guys for another live. But tonight we're going to cover some wonderful, wonderful topics. So if you're in the chat, what's up to you if you're watching? So we're about to get rolling. Hopefully my background music is not too loud because I do not want to get drowned out for what we got going on, okay? All right. So we're going to talk about investing tonight. Not too much long of a live, just enough time to throw some things against the wall and hope that it sticks against your brain. That's the intention tonight for this live. To throw it at you to see if we can connect, if we can make some type of improvements in your livelihoods, make your scenarios and financial situations much more improved. That's the ideology here tonight. That's what we're going to do. All right. We're going to throw a couple things out there and see if it connects with you. Okay. So I'll start by saying this. This is in no shape, fashion, or form financial advice per se, but it's definitely a guiding light to making sound investment decisions based upon information and research and things like that you can deploy when trying to articulate your strategy. Okay. So as it pertains to you going out creating a methodology, right? This is the way that we get this done. Okay. Creating an ideology and understanding what you're doing. That's the first thing. Now, a lot of people don't quite get that when you make investments or you're trying to improve your financial situation, it requires a lot of knowledge. Okay. So in the chat, okay, give me a 1 or a hands up or something to let me know if you want to make your life easier financially. Yes or no? I know the answer to that question. Don't know anybody that would say otherwise. Now, here's where it gets a little bit more challenging. In the chat, put a hand up or a 1 or whatever you want to throw in there and say, let me know if you want it to be easy to make passive income and things like that while you sleep. You want it to be easy. All right. Well, guess what? It's not. I'm going to tell you guys. Unfortunately, okay, I would love to give you wonderful news and let you all out there know that, hey, it's simple to make money. It is not. Okay. I'll be the first to tell you, it is not easy. It is not simple to make bread. It is not easy. Okay. Like the proverbial saying goes, if it was easy, then everybody and your grandma would be doing it. But the fact of the matter is, that's not the case. Everybody and your grandma is not doing it. Everyone is doing what they can to make ends meet. Some people are a little bit more privileged with information, background, resources than others. And some people got to scrap it out. Some people got to go and, take the pickaxe and go up to the mountain and carve out some gold veins out of the mine or whatever have you. Some people is in an office building. It depends, but it's not easy either way. It's not easy for people that's got to put their hands on it, and it's not easy for people that's got to use their mind. It's all difficult. The only thing about it is you get to adjust the level of said difficulty to determine exactly how far and how advanced you become in this journey. Okay, so I'm just going to start by saying it is not simple. Okay, it is not completely out of the question for being somewhat easy to attribute yourself to doing it. It's going to take some work. Now, it's going to be a job now making money. Now, after you make or amass a certain amount of money, it does become easier at that point, because at that point it becomes about making good decisions and good sound investments and things like that. And then it becomes your money starts working more for you than you're working for your money. And that's the ideology that we're trying to go after right now. This is about figuring out how to go after the right ideology so that you can deploy that, whereas you will yield certain returns. Therefore, your money can thus work for you. Then it becomes easier. Okay, that's the trajectory. That's how it goes. Now, you guys have had all day to talk about Bryce, and if you're a Panthers fan like I am, you had all day to talk about the defense and Evero and Dave Canales in the NFC South, and all the teams and the other 31 teams that won't make it to the Super Bowl because we're gonna be there. Well, 30 teams because another one will be there. But anyway, I digress. But right now, if you desire to go to the Panthers games, if you live across country and you want to come to a Panthers game, guess what? It's going to cost you moolah. And if you don't have any, I'm going to show you how to make some. And that's the point of this live, okay? To show you how to do it. Anywho, we digress. So let's start here. All right. I don't want to hear anybody whining about, I don't like to read and I don't like to study. Well, guess what? You better get your head in the game, because anything worth having is worth working hard for. You're going to have to work hard to get what you have in life, one way or the other. May as well put in this type of labor to make it easier for you so that you can make money while you're doing something else. That's the whole point of what I'm talking about tonight, right? Okay, so I want to show y'all a couple of things, right? So that you can see. First and foremost, if you have some type of gainful employment, doesn't matter what that is. I don't care if you work for UPS. I don't care if you work at the Taco Bell down the street. It doesn't matter. Okay, if you own a small company, effectively and effectually, at the end of the day, you must be deploying these specific funds to specific purposes that will yield specific outcomes. And it's about knowing where to go, because this is where a lot of people actually hit the brick wall. They don't know where to start. Okay. And everyone wants to hit it out of the park on the first swing. But the problem is the world isn't designed that way. You're not going to make a ton of money on your first shot. It's going to take a while to build a portfolio. It's going to take a while to build resources. And it's going to take a while to build contacts and revenue streams and things like that. This takes time. But the journey of 1,000 miles begins with the first step. And you'll never get there unless you get your mind in order, start making specific moves throughout the course of your day, stop wasting your disposable income on BS, start aligning yourself with the right kinds of people. Okay? So what we need to do is look at your income and how you are budgeting what you spend every month. Okay. A lot of people have no concept of this. They get a paycheck and they know they have to pay their bills, but this is where it goes off the cliff. They'll pay their bills and then they believe the rest of that's left in the account is, I could spend that. I covered my rent. I covered my utilities bills. I covered the car note and the insurance and all that stuff. The rest is party time, baby. Let's get it. No. No. Okay. That is where we all fall short of the glory, when we start deploying our money in places that we should not, because we don't keep track of it. Now, the first thing you have to do, a lot of you haven't picked up a pen and a piece of paper since smartphones were invented. And this is what's going to mess you up. You still must read and write. Okay. I know everybody's texting. I know everybody's Googling everything. Everybody's chat GBT and everything. Everybody's using AI and all this beautiful stuff. Fine. Okay. No problema. The problem is no one is still utilizing, for the most part, the effective skills that you were taught when you were in the third grade, and that's reading and writing. So you're going to need to take some notes. Okay. Yes, you can do it on your phone, but I want you to write it. It just trains your mind and stimulates you in a certain way when you put pen to pad. A little bit different from typing something on your phone. Okay. All right. So you want to begin to budget out your spending. Your expenditures is what we typically call that. The money that's applied towards the things that you owe. Okay. there's a term called EBITDA. Okay. EBITDA. 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 What that is earnings before interest, taxes, amortization, deductions. Okay. EBITDA is exactly how you determine everything that you're spending out and what that's cost you through the course of a month or a year or however you want to calculate that. You have to look at all of the expenditures that's come out of your earnings, okay, and determine where the hole is, because there's going to be a hole somewhere because you probably don't account for it if you're spending funds in areas that you could probably do without. Now, the reason I'm saying all this is because this is where you're going to get your investment capital from that you don't even think about. Okay. I'm sure you're buying, one extra dozen of Glaze from Krispy Kreme when a hot sign is on. You're probably buying, one too many shirts, one too many items for your house, one too many televisions. It's always one too many something that you might be putting your funds towards. And this is what's going to hit you in your pocket at the end of the month. After you pay all of your expenditures and all of your debts and all that stuff, you're going to be left with a certain sum of funds, whatever it is that you make minus what you owe. And that's what's going to be left in your account. And how you manage that is going to determine where you can actually use that for investments. So think of it this way. What you're doing is you are basically exchanging all of your quote unquote extra or quote unquote free money. You're exchanging that for the opportunity to place said money into investment vehicles that will earn you money while you sleep. That's what this is all about. I'm going to show you how to do it. So first, you have to go to the Walmart, man. Go to the Dollar Tree. You can go to Dollar Tree and get this. I'm gonna make it so inexpensive for y'all. I don't want no excuses. The next time I come on somebody's live and they ask me, I'm gonna say, okay, you go back and check this live out, because I'm not gonna take it down. I'm gonna leave it up. Go to your Dollar Tree, get you a legal pad or any of the spiral notebooks in the stationery section for school kids. Get you a couple of those mechanical pencils, get a pen, whatever you like to write with. Get you a number 2 if you want to. Doesn't matter to me. And I want you to write down, like I said, EBITDA. Write down all that you made in the course of a month. Let's just start with a month. Don't do a year, because that's going to be a little bit more difficult because that's too far out. Let's condense it down to 30 days and write down what your monthly salary is. Okay. And I'm talking about after the taxes, because your gross, you can't really do nothing with the gross because Uncle Trump, Uncle Sam going to take their part of that. So you can't really do a whole lot with gross. It's gross what they do to you, but you know how it works. Anyway, write down basically your gross, and then you just put your net there and see what your net looks like at the end of the course of a working month, 30 days or 31, whatever the calendar says. And then once you write down what that looks like, start then deducting. Okay. We're going to do vertical form addition and subtraction. We don't want to do that linear stuff. That linear stuff is for these new generation kids. From my generation, everything was vertical. All right. And it's easier too. So go vertical. Let's start with the biggest obstacle that you're going to have every month. That's your living quarters. Deduct that. Whatever your rent or your mortgage is, deduct. Utilities, deduct. Car insurance, deduct. Car note, deduct. Grocery bill, deduct. All of this stuff. Anything that runs your car, like gas, stuff like that. I say groceries, you could throw in if you eat out and all that. Put anything you're spending on or consuming food and things like that. Put that on the list and deduct it. Okay, deduct everything that you spend that you have to buy. Okay, that you must buy, something that you have no category on. Put that there. Okay, make sure you put that there, and make sure that when it's all said and done, there is a total line item that basically shows what that number is. All right, put that right there. Then on the other side, go over one more line, and then you put what you are spending your funds on outside of what you're spending for debt that you must pay for. So basically anything else you're doing, like going to the coffee bar, or going out that night, or going to the nightclub, or whatever you're doing, right? Any extracurricular money that you're spending, put that on another line item, and then add that up at the end of the term. Add up all of those numbers, and then subtract the other numbers from the other side. That'll give you the numbers that you must spend minus your salary. So you have no way around that. And then go over to the side and add up everything that you're spending that you don't have to buy. Okay. So you're going to end up with two numbers. On the right, you're going to have that number with things that you don't really have to pay for. And on the left, you're going to have that number basically of what you must pay for. But in the middle of that is going to be your money that you actually have left. Okay. See where I'm going with this? So you're going to see on your left-hand side funds that you have left after you pay for everything you need. And then on the right, you're going to see the money that you spent on anything else. And then if you deduct that right column from the left column, you'll have one more number there. And it'll basically state the number will be what you have left after you've blown all of your free money. So you think it's free money. See, now that new line item there is going to be the number that you get to see after you've done everything for a month that you felt you needed to do. And that's what's going to be left in your bank account. So you're going to take that number, and then you're going to go back over to the right and get the other number that you've wasted on all this other stuff that you really don't need. Okay. You're going to add that back together, and that is going to become your new investment number. That's the number you're going to use then to go invest. Okay. That's going to be the number I want you all to focus upon to go and create new wealth. All right. Did y'all catch all that? If you didn't, go back and review the live. It's going to be up. So let's talk about how we grow said capital from there. You're going to open your brokerage like a Robinhood. Let's just stick with Rob. I like Robinhood. Everyone, you should open a Robinhood account. Now, there are many different variations of this particular type of platform. Okay. But this is an easy one. Okay. This is one that's simple. If you use E-Trade or Schwab or any of these other ones, you can use pretty much any of them. Some of your banks even have it. If you know anything about banking, you'll understand how to use that platform too. They all work similarly, but at the end of the day, you have a goal in mind, and that's to create knowledge so you can use these platforms to grow that money on the side that I just gave you the formula for. Okay. So let's take that number that I showed you how to get to, right? That's going to be our operating money right there every month. Now, here's the thing. I know most people are going to say, well, I can't get wealthy with that. That's only an extra $500 a month. That's only $592 a month. That's only $800 a month. Well, see, you guys don't understand compound interest and stuff like that yet. See, this is a very, very, very lengthy road to understand. But once you get in, you'll learn how money actually works when it comes to investing. Okay. How your money works for you, because basically all these platforms give you the ability to place your funds there, and they use the funds to create new business, new lines of credit, new loans, new products they're going to buy and sell, and all this stuff. That's what they do with your funds when you actually invest them. So what you're doing is you're learning how to deploy that said capital into methodologies with these platforms that will give you this said money at the end of a trading cycle. Trades are happening every single day. Okay. Whether you participate in it or not, actually, you are participating in it. If you use energy, you're participating in the trade. If you buy bread at the grocery store, you're participating in the trade. If you buy clothing, you're participating in a trade. Okay. If you use your utilities at home, you're participating in a trade, because all of these entities that own these products or services that they're selling to you are tradable, and they're selling securities behind it to earn more money to offer more of those services or products to the public. And you're just a participant. Now, which side of the game do you want to be on? Do you want to be on the side of the game where you're trying to get your hands on it, or the other side of the game where you're just watching the parade go by and you're not making anything? Right? So what you're doing is you're going to take your funds, okay? You're going to deposit said funds into your Robinhood, right? You're going to move them from your bank account over to your Robinhood account. Now, this is what you're going to have to do right here. Now, before you start investing, now you're going to just set your account up, put your funds there. So now you're locked and loaded. You're ready to go. You're ready to hit you're ready to pull that trigger, hit the go button, right? You're ready to knock it down and you're ready to move. So here's what happens. I'm going to show y'all something. Let me share my screen. Okay, hold up. Hold up, my good people. All right. Let's see. I'm gonna show y'all something. All right. So y'all see this. This is the ever so controversial, wonderful landscape of the SEC database. Okay. This is a cheat code for all of you wannabe moneymakers, all you future ballers and shot callers and boss chicks, or whoever you want to call yourself. This is where you start that journey right here. Now, I've already pre-selected an entity on here that I happen to like and I happen to do a lot of business with, and this is Tapestry Inc. This is just for an example. Tapestry Inc., they're the brand or the company that owns brands like Coach, and I think they own Warby Parker, and they own like Michael Kors, I think. It's quite a few entities that they own. But Coach being the one that I actually work with a lot, so I'm going to pick on them. Now, if you see, this tells you everything about an entity that you can invest in. Okay? This is how you determine how viable of a company these people are if you want to place your money there and earn a return. This is how you do it. All right? This has everything from their corporation filing, their initial filings. It has everything about their funds. See, this is a VC fund or venture capital fund right here. They've created two of these. See, there's a well, actually three. So there's a regular fund one, there's a two, and then there's a three. So that means they put three offerings out there of securities that you can buy to help them raise capital for the company to grow and expand. Okay, that's what this is about. So I can click here on Tapestry, and basically you're going to see everything about their quarterly statements. You see this? There's their 10K forms. There's the 8Ks. All of these determine exactly how they earn money and how they pay money. That's what a lot of this is going to be about. Look at that. Their business reports are here. If I click this, watch. Let's just click the 10Q. Okay. Actually, no. That's the wrong one to click. Let's do this. Let's see if they post the press reports. All right. So let's just look right here. See this? They go into detail about the company in depth. Right here. All the line items. See this? They tell you about the fiscal quarter earning reports. They tell you about how much money they made. They tell you everything you need to know about this company, because you know why? They have an investor presentation that they put out really like a month and a half ago. Right there. You can actually access that because they'll have this posted on here too somewhere. I just have to go through and find it, but it's in there somewhere. I'll have to go through and look and locate it, but it's there. See, everything about this company will be listed because they are publicly traded, which means they have an IPO or initial public offering, which means they are selling stock on the exchanges. And you can buy said stock through your Robinhood app. Okay. Now, what's going to happen is once you determined, and like I said, if you raised your hand earlier and you want to make money, you're going to have to learn how to do research. You're going to have to learn how not to be lazy if you are. Not everybody's lazy, but some people are lazy. You're going to have to do research and you're going to have to study. You're going to have to find this information if you like the company. Don't just take a third party's word for it, because again, this is your money. So you have to be willing, a willing participant in your financial growth. You have to be willing to get in there and get your elbows and grease, get some elbow grease going, get your knees and hands dirty. You're going to have to do the research. You're going to have to learn how to study. Okay. These line items mean that these companies are accountable to the public for taking the bread. They can't just take the money and not tell you what they're doing. Doesn't work like that. The government will not allow them to do so. FINRA is the financial entity that licenses investment entities, or individuals that are actually, selling these securities and things like that. So you can start right here to determine what these companies are doing. Everything they do, it tells you right there. Okay, you can go through here and find out every single move they make. It's all dated and everything too. See, here's their 8K. I know I'd find it. See, look, Lifestyle Brands unites the magic of Coach and Kate Spade. I forgot that. Yeah, Kate Spade is another one of them companies that they own. And see, all they do is show you why it's good to invest in their company. And all of these right here will be all the files containing all this data. In the interest of saving time, I'm not going to click on all this because we'll be here for a while. There's their 8K form right there. If I click this as an example, there's a table of contents, all of the information on the 8K form. See, this right here shows you exactly how the earnings happen, shows you who's liable for what, shows you how the money is coming in, blah, blah, blah. Okay. And you can just sit here and just pick through and read these things to understand more about the company. See, right there, there's the chief legal officer, David Howard. He is the guy that's responsible for registering this information. So you know it's not a scam or nothing crazy. You're getting hardcore information right here, right? And you don't have to take anybody's word for it. That's the beauty with it. When you learn how to do your own investment research, it teaches you. Look at this. The type of stock. This is a common stock, means that anybody can buy it. It's not the preferred stock, which is offered to like company employees and like legacy members within the company and stuff like that. Day one investors, they all get to participate in the baseline board and the ground level stuff. But this is the common stock that's being offered on the exchanges right here. See that? And they're going to say it's 1.01% par value because they don't have to really list it to open up the IPO. But if they do, they'll give you something to go off of. But obviously the stock is going to be worth more than that. This is just the offering when they register the stock so they can get it on the board. So it's not trading as like a pink sheet or over the counter OTC. This is how they get it on the exchange right here. So now they can legally actually sell these shares, under this 8K filing. See? So this is how they do it. So this is just an example for y'all, right? I just pick on them because I love Coach. So look, there's a JSON file. All this stuff right here gives you all of the information that you'll need to understand the company. Okay, it tells you all about the stock, traded on what date, blah, blah, blah. You click this and it'll go into all the details about the global house of iconic accessories, lifestyle brands, blah, 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 right? All of this is wonderfully exhibited right before you. They don't hide anything. I'm telling you, they don't and they can't. Because remember, they're selling public shares and they're using public funds to grow their company. They're just going to cut you in on the return. Now, I don't know if this particular stock pays a dividend or not right now. I think at one time they were definitely doing that. But some of these stocks, they'll pay a dividend. Sometimes they won't. Sometimes you just have to ride it until you sell the stock and then you make your return off the sale. Then you pay your broker whatever percent. Or you can just see, here's a trick for y'all. See, a lot of people believe that once you buy stock, right, you're losing something. Like, oh my God, I had $5,000 in my account, but now I don't have any money. No, that's not the way it works. Okay. Actually, stock is valued. Stock is like money. So let's say, for instance, right, let me go back. I'm going to show y'all something. Watch this. So we're going to say Apple. Now, while this generates, there's Apple Incorporated. All right. Actually, no. We want to go. See, they have investment trust and everything. See, this shows you everything Apple is doing. Anything registered under the Apple moniker that's theirs is going to show you. See, this is an investment trust that they're using to grow capital in Apple. They probably got this stuff registered somewhere else. I got to find what the subsidiary holdings company is, or if there's a holding company that's holding all of their assets or whatever. But the point I'm trying to make here with this is, okay, so when you buy these stocks, right, you have the ability, once you have them in your portfolio, it's basically like, it's like legal tender almost, that you can't just spend, but you can trade it for value. So instead of sitting on cash that's not going to grow you any money, cash is not going to grow you any money in a substantial value, a marginable value that you could even look at. Like, you know how they give you interest on your account, and it's like 30 cents a year or some crap. It ain't like it's worth nothing to you to do that. But if you buy a security, it's going to pay you something because your money is working for you. You see where I'm going with this? Money that's just sitting in your savings account, you need to have a little bit there in case something goes crazy in your life so you can rebound. But at the most, you need to have your money working for you. And investing in like Apple or Tesla or whatever it is, your money is going to be working for you. So like, let's say, for instance, you buy 10 shares of Apple. Okay, whatever you spend that money on in Apple, it's not like you don't have that money anymore. Apple has basically bookmarked that money into their company. And it's kind of like getting a store credit almost that you're not going to cash in. So it's like you're going to go into a store credit type of environment while they use the money to grow, you know, and put that money to work. Because unless you own a company to some degree or something, you really don't have what it takes if you don't have a company to put that money to work. You can only just sit on it and just wait for your doomsday where you need to use it. And that's not going to help you. These companies actually deploy capital every day in some facet or another, and they're going to grow it one way or the other. And that's what you're going to be looking at. And so while they're doing that, you're sitting off to the side, actually growing all of your capital and all that good stuff with the entity that knows what they're doing with it. And you have to let them go forward and let them do their thing. Now, here's the kick that I wanted to tell you about that. When you invest in these companies, what's going on is you're not losing anything. You are actually earning something. You're making money. And the way I say that is because when you are deploying your capital into these entities, it's going to earn for you, one. And number two, you can actually borrow against your stock. Okay, so you can always access funds against it. Once you set up margin against your portfolio, you can literally just go and take loans against it instead of using your cash. You'll still own the stock, but you'll just pull margin funds against it. So if you need money in the pinch, okay, you can actually borrow against your stock. It's like borrowing from yourself, basically. But the company who has the money is where the value is. So the brokerage or wherever your portfolio is being held, they'll lend you funds against that stock that you can use for something else. And don't get too crazy, because they will do a margin call sometimes, and they'll call all that money back to the table if you're not careful. But you will have access to capital while your stock is sitting there. So it's not like they're going to have you stranded on an island with no access to your money. It doesn't work like that. You're just not liquid. And being liquid, it's a liability. I'm here to tell you, liquidity is liability. All right. That's the thing. Liquidity is a liability, y'all. I'm gonna tell you, it really is. If you are liquid, it's gonna cost you to be liquid. You're exposed if you're sitting on cash. You're sitting on securities, not so much. So what you do is when you open up your Robinhood, right, and you put your monies there, you don't want to start right away buying anything unless you know about the company in and of itself. Take your time, learn about the company, learn about what they got going on, learn about what they do, learn about everything about them, and get a pretty good understanding as to what your goals are with those funds or with that investment. Once you understand that company, understand the management team and all this stuff I'm showing you, how you can go right here and find anything you want on any publicly traded company right there, because they must register all of their movement in these databases. Okay. So this is just the example for you to understand. Make it work. You guys get your hands on that stuff and make it happen. The money is there. Okay. It's there for you. So basically that's the game. That's how you make it work. You go out there and you create the method to generate your money by understanding what you have not overindulged in, and you take that cash that's sitting in your savings or your checking account after you've paid for the things that are necessities in your life, and you deploy that to your Robinhood accounts or your E-Trade or your Charles Schwab or your Morgan Stanley or wherever you got it, any of the entities that you use. And you then start doing the research on any company that you like. Just because everybody says, oh, Tesla's great, you should buy some SpaceX or Tesla or, whatever company, go buy some Ford or something. Well, let's go take a look at it and see what they've been doing over the past year and a half or two. Let's see their P&Ls, their profit and loss statements. Let's look at some of the expenditures that they've been spending out. Let's look at the management team. How much did they earn in fiscal year 2025? What that look like, right? Go back over there and look at that. And then once you know what that looks like, then you can take that bread and start buying those stocks after you've looked up the information. And then what happens is after that money goes into that stock, you just sit and you learn how to trade those stocks. You keep some, you move some around, you buy, you hold, you increase. Now, here's the golden ticket. If some of these companies have what is called the dividend program, you have the option to roll the dividends back into more investment of the stock. So that's where the compounding comes into play that I was talking about earlier. So if a stock was worth 10 today and it grows, tomorrow that stock is worth $14 and you didn't take the dividend when it went up. Well, you just roll that back into the program where it buys you more stock with the increases. So now you grow in your portfolio without even having to touch it. And over time, it gets ridiculous with that growth index. It gets crazy because you never touch anything. And don't panic if the stock goes down. It's just market trends. It's not going to always have a green arrow pointing up. Sometimes you're going to have a red arrow pointing down, but that could be for any number of reasons. It can be because another part of the market sector has caused it to hit a bump. It could be because a Boeing jet that was supposed to take products to a manufacturer didn't make it on time, and so that affected the stock. It could be a lot of things, but don't panic when the stock starts, showing some turbulence. It can be a market shift that's causing it to happen. A lot of things cause stocks to go up and down, but you need to ride it out. Okay, stick with what's working. If you buy a strong stock that's got 10 years of strong performance, okay, and it has never faltered with strong management teams, just because you see a bad month or a bad 2 months or 3 months, or it may drop 3%, 4%, 1%, quarter of a percent, 1 or 2 points on the exchange, don't run around and just say, oh, I got to get out of this stock, because the moment you sell, it goes up 25 points the next day. I've seen it happen to me. It happens. So you have to develop a thick skin when it comes to making money. And you have to develop a interior spine, a strengthened spine when it becomes time to earn money. All right. That's what you have to do. So the wonderfulness behind this is let it earn. Or if you mess up, you're going to let it burn. Stick with it. Put your time and your efforts behind watching your funds grow organically. Okay. Rome was not built in a day. You're not going to get wealthy overnight unless you put a lot of money into it. If you come and put 100 grand into your stocks, oh yeah, you can make some serious money. You could be up twice that in a short amount of time if you know how to move the markets around. If you know how to, buy one, bounce off, trade another one, use that as leverage to get more and buy some treasuries. And so that's the kind of stuff that I do. But a lot of people, you have to have a mind for movement of capital. You can't be just a guy that's going to buy it and sit on it for 8 months and be like, oh, I want to get wealthy. I'm going to buy a stock and sit on it for 10 months and do nothing but just wait. Well, you're not really going to make a ton of money doing that. I mean, you can make respectable returns for your time and your money being tied up, but you're not going to get wealthy doing that for sure. But if you know how to trade on your own, buy here, sell there, because you have your eye on another stock you can get your hands on, the returns and the yields can go over there while you leaving the bulk of your stock intact, so you can get a line or a margin to give you access to buy other stock that you can sell or create a return to pay off any debts that you have on your margin. It's a whole lot of things you can do to move around. But that's how you're really going to scale the wall. You got to actually be active. You got to use momentum. You got to be smart. You got to be calibrated. You got to be bouncing in and out, jumping up and down in the marketplace every day. You cannot be a snail. You cannot be a piker. You can't sit there on your hands like the old dudes used to tell us, sitting with your thumb in your butt, like my 8th grade gym teacher used to say. You have to be moving and grooving, shaking and baking. All right. You're going to have to be adequately involved with your financial prowess. And I promise you, it's actually pretty fun. The more time you spend learning how to navigate the landscape of finance, the more intelligent you'll become, the more confident you'll become in your own financial future. And you can actually make a lot of things happen by knowing how to put your funds of excess to good use and to good work. You plug and play your money in various aspects of growth patterns and things like that. And it's an opportunistic type of livelihood. Okay. Livelihood will be very, very opportunistic. You're going to have to understand what other people are doing that's also playing the same game, so you can take advantage of their shortfalls and deficits so you can advance, because all you're doing is playing the dealer. Okay. At the blackjack table, you're not playing the other people sitting next to you. You're playing the dealer. Okay. You're trying to beat the dealer. You're not thinking about everybody else. In this game, you're not playing the other people. You're playing the markets. What's valuable? What's not? What's going for a higher rate? What's going for a lower rate? If I buy this lower, will it actually go? Do I project it to go up in the next 5 months? Do I like what their management team did 10 months ago? They gave me the rise to believe that if I buy this stock at a low point, it'll rise within the next 2 years, and I could see double my my ROI because I took a shot on this particular company. When everybody else bailed on it and the stock went down, I bought when the stock goes down. You buy when the stock goes down, not when it's up. See, everybody wants to get the stock that's popular. They'll go and grab Tesla or SpaceX because everybody knows about it, but it's real high. They don't buy the companies that are going in the red, that are going down. But that's the time you want to actually put your hands on something, is when the stock is decreasing. You buy when the stock is down. That's how you make money. You don't make money when the stock is up. Everybody's buying it. Supply and demand is crazy, and you get nothing when the stock is at its highest in the green. You're going to get marginal returns at best if you're fortunate. And that's like maybe a half a point or something crazy. But guess what? You buy some of these other companies that no one's buying. You get them when they're down, when they had a rough month or a rough year. And then you find out, that's a new management team that used to work for Apple that's coming over to the new company that's going to run it now. So the possibilities are now increased. So now you have knowledge about how the company is working because you're reading and doing your research. Now I can go over and grab some of this stock because I projected it to increase because of said new management team or new operating procedures or new cost benefit analysis reports and things of that nature. So now I understand why I need to be buying stocks when they're down, not when they're up. You're not making any money when stocks are up. Trust me, unless you already own it and you had it for 10 years. You're making money on stocks that were down that went up. That's when you're profiting on that type of stock. But don't just go out of the gate buying big time stocks. See, if you buy the big time stuff, you could buy the big time stocks as a security mechanism because you know the value is already there. But don't expect to make a lot of money off stocks that's already entrenched, like Coca-Cola. Everybody knows about Coca-Cola. They're not an up and coming company. Everybody knows Coca-Cola is there. Everybody drinks Coca-Cola. That stock ain't going nowhere. It's going to be, it's going to probably, it's going to fluctuate very meagerly, but it's not going to tank out. It's too big to fail. If it ever fails, another company will buy it up and it'll be right back to where it was. So that's the thing about those big stocks. You're not going to make a lot of it unless you had it for a long time, or unless maybe your granddaddy left you some or something like that. When he bought it back in like 1932, when it was only like a nickel to buy a stock. But trying to buy the big boy stocks today is not going to get you the most money. Only, I want to say seniors and mature elderly people would buy that stuff because a lot of their futures rely upon solidified blue chip type stocks, the solidified stuff, because all they're going to want to do is lock and safeguard their funds or safeguard their wealth that they've earned over the course of a lifetime. So they'll just put it behind a stock like that. And then they know at the end of the day, they can always cash out. They'll earn a little bit of money, but they'll cash out and they'll be good to go. Or maybe they'll just, bequeath it to their grandkids or something. But you're not buying small amounts of $300 shares from Coca-Cola or whatever have you, because you're not going to make a whole lot on that. The way you make money, you got to find the up and coming companies. That's what I showed you the index for. That's why I showed you the background on that. Find the up and coming companies, the ones out there that people are trying to get their hands on that are just coming up. The ones who are shown the tact and the resourcefulness in order to bridge the gap between becoming a strong company and a startup. Companies that show strong management. Look at where their management team comes from. How did they assemble the management team? Where were they before they came aboard this company? What's their background? Things like that. Once you find out the information on said company, then you start buying the lower graded stocks, the B rated ones, the ones that have not bombed out, but they're slowly making an increase. And the only reason why they're not A+ stocks is because they don't have the money to invest in the company yet. But this is exactly why you get into what is called the ground floor. The ground floor is when you find a company that's new or newer, that are up and coming. Maybe they're 10 years old. Maybe they're 15 years old. Maybe they're 2 years old, but they're showing strong traction in the marketplace. They have really good support. They have really good backing. They have hardly no debt, or maybe the debt is manageable. Okay. But let's say projections look pretty good because they found a way to increase their productivity on a global market sphere. So once they've learned how to do that, all they need is a slew of investors. See, you grow and you make money off of a company when you get investment capital, not when you sell products. Selling products only pay the light bill, but that don't help you to grow. Okay? Companies understand this. I educate people on this every day. You don't make money when you sell products. You make money when you can scale. Okay? Scale is how you make money, right? Scale is where it is. You have to put your hands behind, or put your weight behind companies that are scaling the wall. And you do that by obtaining investment capital into the company. And those are the companies you want to grow with. When you could buy a stock for $14 a share, $13 a share, but you look at the past 3 years of fiscal earning reports and they're showing steady increases. They're getting more and more investors to come to the table. So now the stock is showing more value on the market because they can corner the market. They can produce stuff that no one else is producing. And everybody is liking this company. Guess what? You buy 1,000 of those if you got $1,000. You buy, 100 of those, right? You got $1,000, buy 100 shares. $10 a share, you cool, man. You're doing your thing. Buy 100 shares, $10 each, boom. That's your 1,000 right there. Now you're sitting on potentially anywhere from 5, 10, 15, 20 racks over the course of time, because that company is going to just grow. And then you watch it. And you watch the way the company grows. You watch how they grow. And if you see something you don't like, how about this? Instead of sell the stock, go and buy or go and pull a margin against it, and then use that margin to buy another stock you might like. So that way you call hedging. Now you're hedging your liability, because if one stock now falls short, you've already pulled margin to buy another one that can basically outpace it or stabilize a potential liability. And then you take that. And then if you feel good about that stock, you might dump the other one. And then you use the proceeds to pay back your line or your margin after you sell. Pay it off. Utilize that principal towards your stock, and then you work the capital gains from there, and then you pay your 15% capital gains tax, and you're good to go. See, that's how it works. Use all of these tips I'm giving y'all to formulate a sound strategy to go out there and conquer your life. All right, but don't spend a whole lot of time on nonsense every day, because a lot of people likes to do that, and I watch it, I see it. Take the time to research. Find companies that you may like. Find companies that you may have heard of. Okay. Basically, you can research companies all day long. Just Google them. Hey, what about a company that makes fried potatoes? Give me a list of companies that make fried. You can ask freaking ChatGPT, and it'll tell you every company that makes sweaters or ice cream companies that make ice cream. Give me a list of all the companies that make ice cream. Boom. Now you know who they are. Go do the research on the company and see if you like it. Some of those ice cream companies are going to be bigger, more historic, more going forward. They've established more. They've made more money over the course of time. They're older. Okay. Some of them are going to be newer and upstart companies. Doesn't mean that they're not valuable, though. They just don't have that heritage and that legacy factor built into it. But you can get in on the ground floor and buy that stock. Or if you want to substantiate that and ground yourself, buy some Breyers, but then go and buy Jenny's at the same time. Buy less Breyers, but more Jenny's, because Breyers ain't going to go anywhere. Breyers will be around, so you can always rebound to that. But buy more Jenny's, because that was going up. And you get on you ride the wave to Jenny's and watch how Jenny's is performing. Her ice cream is natural. It's not that freezer point stuff. It's that really, really good naturally cream ice cream. You buy that. Guess what's going to happen? As the company begins to come out with the company starts getting more growth, more investment, people will start buying more of it. When the demand goes up, they'll create more flavors, which creates more customer base. See, now the stock goes up because everybody is wanting Jenny's. And guess who's going to come off like a fat cat? The person that actually invested and said ice cream company. And if you're in a pinch, car breakdown, or you need to pay something, boom, pull your margin out, go use that money to do something else. As long as you put it back, though, because remember, you have a loan out there, you have outstanding loan. And if you don't pay it, they're going to take your stock. So just make sure you settle your debts, but use those funds wisely to keep growing. All right. This is the ideology. This is what you want to do. You put those funds in different places where it will grow for you in the event that you might need it, or you might want to just sit on it. Just let those funds continue to gravitate while you're sleeping. And like I said, there's no right or wrong. Well, there is a right or wrong way to do it ultimately, but if you take your time and just educate yourself, there's really no wrong way. It's just going to be time. You might get lucky and get a stock that might blow out of the sky. You might make 35 grand. It's happened before, trust me. Or you may make $15. But at the end of the day, it's not about how much you make. It's about the trajectory of making something. It's about putting your money to use and watching it grow organically. All right. And once you learn to play the game, then you become a pseudo trader. You know how to trade your stocks and earn money and play the game and grow your portfolio. It's buying low, selling high, putting your money behind companies that have a future, strong management teams, strong ROI, strong management of expenditures. You know, they're investing in their machinery. They're creating new factories. They're expanding to new markets all over the world or the country or wherever they at. That's how you make money. You make money with companies that are growing. But you want to get on the low. You want to get on the low scale and get to the companies that are actually getting started. And that's how you make the money. All right. This is very simple. But a lot of people, unfortunately, we're not trained in this in grade school, right? They don't teach us anything about money in high school. And the best you're going to learn about anything with economics in high school is probably going to be civics. And I love civics, by the way. I was an A+ student in civics. And history. I was an A+ student in history. So you can basically learn a lot of this stuff on your own if you trust your own level of intelligence. If you believe that you are an intelligent person, because everybody wants to believe they're smart. But are you really? That's the question. Everybody believes they're intelligent, but are you intelligent? Like, do you really have the knowledge base that you say you have? If you do, you can actually make these things work. You can put it all to good use. You can actually start small and work your way up. That's what this is all about. I'm not here to say you're going to get wealthy overnight. That's not the game plan. I'd be a scam artist if I said that, because no one makes money overnight unless you hit the lottery. And even then, they don't know what to do with the money because they go broke a few years later. So this is financial education. This is necessity doctrine. This is intravenous information that we're going to feed through your system. Okay, you have to get it in your system and in your mindset to be proactive about how to go out and earn and how to create. And you have to be willing to put the time in. Because don't tell me y'all ain't got time. I see some of y'all out there on these platforms. I know you got time. Okay, we spend hours sometimes talking about sports. A lot of my homies go on that's probably in the chat or probably listening right now. We spend a lot of time talking about things that make other people money, but it don't really make us any. Okay, these professional athletes, they have investment guys like me that they're talking to when they're not playing football. That's managing their wealth for them. Now, I wouldn't go that far. I would learn my own wealth if I was them, how to do it myself. But anyway, they take advice from some of these people. And so you don't want to end up on 30 for 30 going broke. You want to know these things. And so these guys, they're making money while they sleep. Their money is working for them. They have funds tied up in this fund and that fund, and they have whole life insurance policies and all kinds of stuff, man. Their money is diversified. For sure. They have diversified portfolios, no doubt. And that's how they're earning what they're earning over the course of time. They got their hands on the proverbial trigger, and they pulling it because they know where and how to expand their net worth. Now, what is net worth? Net worth is what you owe minus what you own. That is your net worth. What you owe minus what you own. Ask yourself this. What do you own? Yeah. End of the day, what's yours at the end of the day? If everything you have is leased and rented and all this stuff, it's a now that's not a bad thing, because if you know how to play that game, you can still end up on the right end of the spectrum. If you know how to maneuver through the borrowing game, that can work very, very handsomely if you know what you're doing. But if you don't have any assets or capital, anything to deploy anywhere, or if you don't have resources or relationships or anything that you're working with, you better get some. Go out and get some. Go out and earn some, create some, put some together. Talk to 50 people a day. Go out and meet 50 new people per day. 50, if you can. Or 5, doesn't matter. End of the day, meet somebody new that you didn't know yesterday, because they may put you on to something that you didn't have going on, and talk to them about proactive things, because people like to be around proactive people. They don't want to be around lumps of clay in the mud. So all you have to do is just apply the information that I'm telling you and watch things around you slowly begin to trend upward. This is going to be the thing. This is going to be it. What's up to everybody in the chat? What's happening with y'all? I see people coming in. What's good? What's good? just a little bit of information. We just dropping some knowledge on investments and things like that. I'm trying to show all my good people tonight how to get money, or how to take small amounts of money and contort that to larger returns, or ROI. Showing you how to get that bread and flip it back in your pocket. So I'll summarize by saying this before we close out. One, go to Dollar Tree, get that 3 spiral ring notebook, or that spiral notebook, or whatever. Get your mechanical pencil or whatever, pens. Write down your expenditures, meaning what you spend out every month, what the cost, everything that costs you money, not the stuff you spend on, the stuff that costs you. Mortgage, car note, car insurance, utility bills, all of the like. Everything that costs you money that you have to buy. Write that down. On the right hand side, write another column. It's going to be everything that you spend money on that you don't need. Be real judicious with this list too. Don't pull back, right? Be judicious in this now. So Big Tight say fruit strand. Put that money up on that Big Tight. Don't play with it. 15 minutes, Big Tight, 15 minutes. Oh, shoot. Take those numbers, right? Subtract that from the monies that you have to spend everything on. And what's in the middle is what you have left after you've blown your money. I say take that money and put it with the other money that you're blowing and go put that in your Robinhood account. Start doing your investment research on the site that I just showed you. Find a company that you like. Study. Do research on up and coming companies. Check out all the information on them. Learn about the company a little bit before you put money behind them. Don't just rely on your investment broker, because he's only going to give you his ideology as far as how to invest. He's going to look at you and say, this is what I would do. And he's going to put your money where he want to put it. And you're entrusting that to him. I wouldn't do that so much. I mean, you could, but you have less involvement when you just put your money into other people's hands and let them manage it for you. I don't like the way that feels. I like to be in the game. I want to be on the front line. I want to be like, okay, let me find out what he's thinking. And all it's going to come down to is his knowledge of how the market is moving. That's really what it's going to be. It's not going to be that he's more intelligent than you. Maybe he understands how money moves a little better. He may understand economics better than you, or she might understand economics better than you. But that's where you come in. See, you're well more equipped when you understand the economical landscape of the American exchanges. You know how they move, how they earn, how they grow capital. Then you understand companies. You understand business, commercial enterprise at its finest. Learn about these companies, and you'll become an expert on business. You'll become an expert on how these businesses actually navigate. I'm telling you, this is how you learn how business works. Just reading all of their filings. It will tell you everything about a company. The stuff that they cannot hide, the stuff that they won't tell you if you call the company. If you call Burger King and say, hey, how much money did y'all earn last year? They're going to be like, what? We ain't telling you that. That's what they're going to say. They're going to say, why do you want to know? We don't keep but $100 in the register, sir. They're not going to want to tell you. But when you do the research, this is the information that they cannot hide from you. This is the information that they must share with you. It's there. You just have to be willing to go and get it. All right. That's all I'm trying to tell you. If you pull it for yourself, you learn how it moves and how it works. You can now take that knowledge and put it to use for you, because it's free. It's free information that they're not going to tell you off the top of their head, but they have to publish it. They cannot hide it from the public. They must display it. Okay. It's public record. Okay. And they know it's there, but they don't have to go around telling everybody it's there. The law just requires from them to publicize it, and they do. But after that, it's on you to understand what's there. You have to do the research and understand exactly what's being displayed to you. And at that point, you can take said information and turn it into a gold mine. Knowledge is power. And reading is fundamental. All right. Y'all gonna have to understand that. So I'm gonna close off with that, everybody. I just wanted to take a moment, share some investment knowledge with you all. This is not intended to be advice. This is just me sharing my experiences and my knowledge and expertise, rather, with all my good people out there who I love and respect, each and every last one of y'all. Anytime, shoot me an email if y'all have questions about this type of thing. Email is there. You can go on my channel, hit the email. It's there. And we can, have one-on-one conversations about this stuff, I do consultations too if we need to talk about the company or the business, showing you how to actually get more granular with this thing. I can show you how to do it, right? With a consultation. Be more than happy to do it for you. So don't not take advantage of this information, this knowledge. Use it for your benefit. Take time, read, study, and be willing to go as far as other people will not go. This is how you advance. This is how you grow. This is how you make your money, all right? So I want y'all to remember that. Do not rely on other people's words. Rely on your own understanding. Rely on your own level of intelligence, okay? Rely upon your own IQ, okay? Use the information that I just gave you to start your journey in financial literacy. This is why we all are short of the glory, devoid of capacity. All right. We don't have the literacy financially, that is. Fiscally, we are in a negative scenario in our fiduciary capacities because we don't know, but we know now. And that's what I'm sharing this for y'all. Okay. So y'all do me a favor. Like, share, subscribe, and comment. Let everybody know about this particular live because I thought it was a good one. We dropped some real good jewels tonight. Would you guys agree? Yes or no? Share it with everybody. Let everybody know what's going on, everybody. So that being said, it's your guy in Quantum, and I am out this pieces.